All right, time now for Consumer Confidential with KTLA's David Lazarus.
And he's here with us in studio today. So something we were talking about earlier, traders, they're panicking this morning. Tell us why.
Panic's a strong word, but yeah, they're kind of freaking out, to use the financial term. And at last check, the Dow down by a little more than 700 points. It was down more than 800 points earlier in the day. As the same cast of characters rears their heads, inflation, the possibility of a recession, and what on earth is the Federal Reserve going to do about it? Inflation, we all know that's a thing. On Friday, the Labor Department reported that inflation in May up 8.6% from a year ago. That is really a lot. The market freaked out that day. It's freaking out again today because it now has to figure out how aggressive is the Fed going to be in raising interest rates to cool the economy and hopefully bring down consumer prices. The over-under had been that another half-point increase was expected this month. Now there's increasing speculation that we could be looking at a 3/4-point increase this month. And if so, that would be the largest such rate hike since 1994, which tells you how extreme this situation is becoming. As for a recession, well, it's looking increasingly likely when you listen to economists that there is a recession on the horizon. Most economists seem to think that it'll come in the first half of next year. But think about that. What that means is the worst is still to come, that we're still facing about a half year of volatility until we get that recession. And then the question is, mild recession or nasty recession? At this point, we don't know, but I think it's fair to say we're not through this yet, and there are more bumps and bruises on the way.
Oh, we're so excited, Laz.
Thank you very much.
A lot of
Great way to start the week.
Yeah.
Thank you.
A lot of negative economic news, a lot of negative economic forecasts. It's not just stocks reacting. Bitcoin is reacting too.
Not just Bitcoin. We're looking at the entire crypto market getting hammered today. Bitcoin is now at its lowest level since December 2020. And just get your head around that for a sec, because for months and months now, crypto enthusiasts have been telling us that this is the new hedge against inflation, that when things get bad, you're not going to put your money into gold or silver or palladium. Instead, you'll put it into crypto. And now we're seeing nope. And there's a reason for that. There is no inherent value to nearly every cryptocurrency out there. So unlike gold, which does have some inherent value, there's none here. What this is an example of the greater fool theory in action. In other words, investors buy crypto at a certain price and hope there's someone goofy enough to come along and pay a higher price and take it off their hands. And that's all there is to it. As a hedge, therefore, it's not much of a hedge. As a way to gamble your money away, yeah, it's that. So I'm not saying don't do it. I'm just saying that's something to be careful about. Another element in the crypto market today is a crypto company called Celsius paused withdrawals today. And how's that for a red flag? They seem to be fearing a run on the bank, as it were, and so they're not letting people get their money. And if that passes into other crypto companies as well, that too is going to really underline the fact that the emperor's wearing no clothes.
Yikes. Okay, so crypto, I'm still having a hard time understanding. But one thing I think we can all get behind is electric vehicles is the next best thing. But now there's a company that's folding just after a year of being in business?
Yeah, but Alina, what makes this really interesting is we're talking about an EV company, Electric Last Mile Solutions, that isn't really being punished because they're on the EV market, which is obviously a growth market. It's something else. Now, first of all, the company has filed for Chapter 7 bankruptcy protection, which means they are preparing to liquidate their assets. They're not expecting to come back. They're saying adios. This after they've had some departures of senior managers and reports that there's an investigation underway by the Securities and Exchange Commission. But the story here is that this is all happening less than a year after this company went public. In other words, started offering its shares to the public by merging with one of those special purpose acquisition companies, aka SPACs, which is the same way that Donald Trump brought his Truth Social to the market by merging it with another one of these shell companies that are already out there. Here's the danger for investors. When companies do this, they are skirting more severe regulatory oversight. They're basically bringing their shares to the marketplace without having been properly vetted by financial authorities. This is a problem with our system right now that needs to be fixed, but it represents an enormous danger for investors because suddenly you've got a pig in a poke out there in the marketplace that nobody's given a financial seal of approval to. That's precisely what happened here, and that's something that's a danger now for every other company that went public using one of these SPACs. to get to the marketplace.
Ooh, lots of warnings for investors there, Laz.
That's what we're here for.
Thank you so much. Good to see you.
Thanks for all the good news, Laz.
Sorta
but
good.
We'll try again tomorrow.